Hello and welcome to Chartbusters. Well, it's not a great morning for the bulls. The Nifty is under some pressure. We're down nearly around 55 points approximately. The Nifty Bank as well is struggling early this morning, and the breadth of the market is in favor of the declining stock. So the bears, they'll feel in control at least 90 minutes into this trading session. But if we're looking at the Asian markets, well, those are the cues that are really coming in there. The Hang Seng is down more than 1% odd. The Shanghai market as well is down nearly around 0.6%. So in that sort of a backdrop, well, the Nifty as well is seeing some selling when you have the rest of Asia trading in the red. I think the only market from the Asian basket that is doing well, I think, is the Straits. If you pull up that market, the last time I checked, that was holding mildly in the green, while the other few markets, they are still in the red, doing a relative outperformance actually in today's trading session. Hey, Mangalam.
Absolutely, Nigel. You know, also we can attribute this to a bit of the weekly options expiry, because the 12,000 mark yesterday we tried to capture that was given into the previous trading session as well. The minute we approached the 12,000 mark, we saw a fair amount of selling, and the bears believe that maybe the 12,000 is their territory, primarily because you take a look at it, tomorrow the options that expire, 12,000 call most active in the options chart that we're seeing. 14.5 lakh shares added, had the maximum open interest as of yesterday as well, and today only more additions seen out there. 3 days in a row, 12,000 not being able to conquer sustainably, and that is what is giving bears the ammunition at that point in time. Let's see whether we see support at the lower levels or not. The maximum open interest on the put side is at the 11,900 level, so we are there itself. First up, all the top stories, and then we get cracking on all the individual things that we're tracking this morning. Indiabulls Housing Finance, the biggest loser on the Nifty today. The stock continues to decline over allegations of fund siphoning by the promoters, down 11-12% this week as we speak, and this despite management clarification yesterday.
And Yes Bank as well is among the top losers on the Nifty today after non-executive independent director Mukesh Sabharwal resigns, the second in the last 2 days. Additionally, reports suggest that founder Rana Kapoor has demanded a board seat and compensation for lost payment.
Reliance Capital and Reliance Homefin trade weak after PwC resigns as the auditor of the companies. Other group stocks like Reliance Power, Reliance Communications, they see a bit of tumbling and then recover from the lows.
And DHFL gains today on news that the company has paid rupees 960 crore rupees interest on the NCDs due on June 4th within the 7-day grace period via Aadhaar, sale proceeds and internal accruals.
Steel stocks, they gained today after cnbc TV18 learns from sources that the Steel Ministry is pitching to recast the existing anti-dumping norms.
Okay, all right. How do you trade the Nifty now as we speak? A few of these auto stocks, actually, they've come in for a fresh bout of selling. So one would have thought maybe after such a sharp correction we've seen on Maruti, that stock, in fact, should stabilize at these levels. Well, in fact, in the last few minutes, there is some incremental selling that's coming in there. So that one has moved to the low point of the day. Z Entertainment as well, that's going to be really the big one. Not only from a stock point of view, not only from a group's point of view, but from the market point of view. Because among all the groups out there that are a bit leveraged or heavily leveraged, the street is counting on Z Entertainment coming up with a solution. For the time being, there is some profit booking from the top. But to be fair to Z Entertainment, yesterday it had a good run. So it's giving back some part of what it put on yesterday. I think the problem as well is in the Nifty Bank, because you have stocks like IndusInd Bank, ICICI Bank, as well as SBI. All of them are lower. And that explains why the Nifty Bank, in fact, is down 250 points. Is this dip a buying opportunity? Should you be looking to get into the Nifty or the Nifty Bank, or are we likely to see a day when we slide for the remainder of this day? We have Ashwini Gujral who joins in for a quick technical check. Well, Ashwini, given the Asian backdrop, the Nifty as well is down nearly around 0.5%. We have moved to the low point of the day. Would you be looking to buy into the Nifty at some point of time, or do you believe you'll be looking to short the Nifty on any kind of bounce?
See, basically last 3 days we've not been able to cross higher levels. So today is a trending downward day, and my sense is that it'll get worse, and probably nearest support will come around 11,800, 750 thereabouts, because the way financials and large financial stocks are dropping, I don't think you will find support very easily. In fact, it was very easy to make money on the downside given the way the markets are moving. There's not a sideways day where if you buy here, you're likely to get higher levels during the day. Having said that, RBL Bank is a sell with a stop of 670, target of 645. HDFC is a sell with a stop of 2185, target of 2140. And Hind Petro is a buy with a stop of 304, target of 321.
Ashwini, take your point. A couple of stocks which have come into my ken as we speak is our Balkrishna Industries, as well as we have Motherson Sumi from the auto pack and the auto ancillary. Balkrishna Industries makes tires. Both those stocks are witnessing some bit of an outperformance in an otherwise weak market. Anything that chartically explains this?
Some stocks will always go up, but the whole issue is that big sectors are now coming under pressure, CNX, IT, or Bank Nifty. So these are mild rallies, which I don't think much comes out of them. So the idea should be to remain short on financials and autos.
All right, Ashwini, thanks a lot for that. In fact, as we speak, the Nifty has extended its cut. But let's move on to a CNBC TV 18 exclusive now. The Dharmendra Pradhan-led Steel Ministry has reached out to the Commerce Ministry asking for a relook into the norms that govern the import of steel into India. They've called for a relook into the anti-dumping norms as well, and as a result of which all these steel stocks are buzzing higher today. Rituparna Bhuya, our colleague, filed this report. Listen in.
There are three basic tariff-related issues which have been raised by the Steel Ministry. Firstly, the Steel Ministry has told its commerce counterpart that the anti-dumping duty that is imposed on steel, that has become totally ineffective. And that is because the anti-dumping duty is based on what is known as the reference price. The reference price is arrived on the basis of an investigation. As far as the current anti-dumping duties on steel are concerned, the investigation period was between July and December of 2015. And all the factors that were used to determine the reference price for steel anti-dumping duties have become outdated. That is because the input costs that go into determination of the reference price, including the price of iron ore or coking coal, all that have changed, and hence there is a need to look into the reference price as far as the anti-dumping duties are concerned. The second issue that was raised by the Steel Ministry is that we should do away with what is known as the lesser duty rule while imposing anti-dumping. Now, according to the Steel Ministry, all other countries have moved away from this lesser duty rule as far as imposition of anti-dumping duty is concerned, and hence India should also look at changing its customs rules and impose an anti-dumping duty on the entire dumping margin, and not look at from the perspective of the lesser duty rule. The third issue that was raised by the Steel Ministry is regarding free trade agreements, because the Steel Ministry believes that a lot of steel is coming through the zero duty route into India. Not only that, we are negotiating a mega FTA known as the RCEP, and China is a part of that. And there are huge concerns within the steel sector regarding RCEP, and hence the Steel Ministry has urged its commerce counterpart to be cautious while negotiating such FTAs. With that, it's back to you.
Okay, rather important information coming up for you on the screen. Reliance Industries looks to raise close to 80,000 crore rupees. And in fact, GIC, Brooklyn, OMERS, Allianz, all of them, they have in fact not commented on this particular query, but it's rather important because it's via private InvIT listing of the telecom infra assets. So this is rather important information. It's source base as of now. Remember, we should get a disclosure as well up for you on the screen, because Reliance Industries, that in fact is the owner of TV 18 and Network 18. Those are the channels that you're currently watching. But let's get in Nisha. Nisha is picking up all the source-based information, and she joins in to fill us in. Nisha, over to you.
Thanks for that, Nigel. Of course, sources with direct knowledge have shared with us that Reliance Industries has really fast-tracked raising about 80,000 crore rupees via the infrastructure trust, which is in the private space for telecom towers as well as their fiber assets. This is the deleveraging exercise which Reliance Industries has also articulated in the past. Now, what they're looking at is talking to several investors, which are largely sovereign wealth funds as well as infrastructure funds, which are looking keenly at an InvIT in the telecom tower as well as fiber space. We do gather from sources with direct knowledge that the investors like GIC, Omer, Allianz, and several Canadian pension funds like Brookfield are in talks with Reliance Industries to invest in in these two InvITs that are going to be rolled out and give them 80,000 odd crore rupees. These are early days. There could be more participants as well as more investors joining the fray to invest in this. Remember, largely it's done to deleverage the company to make it more capable for its bigger 5G play. And also remember, an InvIT listing of tower assets will give more comfort to the other telecom companies to use those resources to lease them out because they are professionally run. So there are many issues in the telecom sector leading to the cash crunch and also lenders having exposure that can be sorted by an InvIT listing. So what we are gathering is that Reliance is in talks with several players to raise this 80,000 crore rupees. By the end of this calendar year, there should be these transactions materializing.
All right, Nisha, thanks a lot for that. Definitely keep an eye out on it. Looking through some data that RIMA had sent, they have a debt. Reliance Industries has a debt of close to 2.7 lakh crore rupees, of which Kotak estimates 1.5 lakh crores belongs to the Jio business itself. So if they do go ahead and raise that 80,000 crore, would help in the company's deleveraging plan. But just as we speak about Reliance, remember, this is the company that owns and operates the channels that you are currently watching. With that, we slip into a short break. Come back, we'll focus on the real estate and pharma space with Sameer Bes.